Now, you're pretty good at knowing what the bottom is before we rip again. Where are you seeing the potential bottom in this?
I think we're at the bottom now.
Right.
I mean, I was just checking earlier today, and I was looking at the on-chain flows, um, and it tends to do a particular signature where it just zeroes out, and then flows coming into the network start to accelerate away while the price is still dropping.
Wow.
So I'm pretty confident we're within. I think this is the bottom. If it's not within 48 hours of the bottom. And so, yeah, I'm stacking up my long positions right now, personally. Um, but yeah, it's. I think we're pretty close, and through this entire downward move, you can see from the price action and the way in which it's trading on Coinbase. There's consistent buying, and consistent outflows going into cold storage. So that's a signature to me as a maybe an unannounced institution that's buying. Maybe it's a private hedge fund, or many of them, but there's certainly a lot of buying going on from Coinbase, which tends to be US institutions. And by the way, those coins moving out, they're moving to participants that have no history of selling. So either they are new, they're brand new wallets, and they're just in accumulation mode, or they're existing holders that are continually adding to their stack of coins that they're not selling.
What is at play here that's pushing the price down? If we've got all these new people coming in and buying.
Well, the way I look at it is that there's a price floor on Bitcoin based on the amount of capital that's coming in and held by long-term investors. That price floor is not the price that you see on the chart. There's a price floor which is supported by these long-term guys, which I do a lot of modeling around to try and figure out what that is. And then we'll see the speculative price that moves above the floor, and that's influenced by short-term participants, short-term traders that are buying the Bitcoins, or now we've got the futures exchanges which do much higher volume, and they're buying these long contracts or short contracts, and so that price that we actually see on the price chart can float way above the floor or even drop below it in massive scares like the COVID. And so there's plenty of room to drop. So there's certainly speculative, yo-yo, springy movement above the floor to go, especially if we're high above it.
Are you talking about the Rick Astley's here as well?
Yeah, that's the strong holder thing. I was talking about the Rick Astley's, which what Glassnode do is they break all the wallets up that's visible. They bring them together into clusters. Each cluster is like what looks like one person, and then you can sort of look at their history and go, well, this cohort are very speculative. You see coins coming in and out of their wallets, and so they're not really holders. They're in it to trade speculatively. Then you have the middle ground where they're stronger holders. They buy more than they sell, and then you've got the Rick Astley's of this world, which are highly illiquid. They just buy, and very seldom do you see flows coming out of their wallets. And so one of the metrics that you can draw with that is to see how much of the coins flow into Rick Astley, because that dude's never going to sell or let you down, right?
No.
You'd be crazy show right now, because there's more buying the dip than ever seen before.
I think when I think of narratives, actually, I think of like the newspaper, or any, like almost the Bloomberg report. Stocks fell today because so-and-so did this, or the market felt fair because of that. And it's absolutely bullshit, right? Like, if you're in the market, you go, no, actually it hit the technical resistance and there was a bearish divergence, and we rejected off that because all traders will have to sell because of that signal. That's why it rejected, and then someone found a narrative that also coincided to this day. And so when I look at the Bitcoin price, I'm like looking at fundamentally who's buying, who's selling, and then you can attach like, right? So like recently, the price has sold down very, very quickly. And the narrative that's been attached to it has been, oh, it's tax season sell-off. And wow, they left it last minute because the 18th of April is the deadline for many Americans, and there's assumed that that's tax sell-off. And I mean, you look on at the data and it's like, well, overall, there was very mild selling from hodlers. Overall, spot was buying, mass amount of coins moving off chain, on chain, off the exchanges. Actually, spot was buying. Who was selling? Oh, that was the futures markets, particularly the calendars market, which is linked to the CME and the sophisticated institutions who are trading the correlation to tech stocks and the S&P. So you got this narrative that it was a tax sell down, but actually it wasn't. It was traders trading this correlation. So that's what I think about narratives in terms of price action. Like, I think they're too coincidental to, some sort of reasoning, but they're not backed by any kind of the fundamental data you look at if you're looking at the markets properly. So yeah, like yields increasing, tech stocks get pressure, then yeah, that is right. It's those guys that are selling down Bitcoin, but you can see that in the data, and I think that's but like. I think it's very hard to attach narrative to without evidence. Just thinking, it's correlation is not causation.